Why you in a mood? Acting brand new. Down. What's up, sons? I'm going to start off today with another parable. I don't know why, but welcome. Good Monday morning. So, a thunderstorm appears. I can't make it go away. I notice a fearful thought, but who's in control, me or my thought? I am in control. Even though I can't control the storm, I can control how I think about the storm. I can't escape the storm, but I can escape my fear of it. It's normal to be afraid, but I don't have to be afraid. I can choose a different thought. I can choose to take a breath and be curious. I can choose to protect myself by taking shelter. I can choose to watch the storm from safety. I might even be able to enjoy the storm. The storm does not matter. How I react to it matters. Instead of trying to control the storm, I will control myself. Instead of focusing on what is happening around me, I will focus on what's happening inside me. The storm destroyed my books, my TV, my bike. The storm did not destroy my only true possessions: my honesty, my courage, my kindness, my patience, my curiosity, my intelligence, my sense of humor, my creativity, and my self-control. Good morning. Let's get into it. What's up, sons? It's Blind Rod with Son of a Tech once again, and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I am the host, Blind Run. That is my online persona, which came from, of course, my gamer tag way back in the day, all the way through Halo 2, and even till this day, I suppose. Started out in like Counter-Strike. Had a couple before there. I think one was like Air Fleet and the other one was MX Freak. Doesn't matter. Blind Run stuck. My real life name is Matthew. Today we're going to be talking about the 3090 Ti and basically how it is the high-end efficiency king now and is beating out the 6900 XT in games at 300 watts. We'll see if there's any information there for, of course, mining. Then we're going to talk about GPU pricing and shortage issues. Pricing coming down, shortage being alleviated. Good for gamers and, of course, good for cryptocurrency miners that are not afraid of the storm. Remember, you can control how you react to the storm. Today, we're also going to be talking about AMC Theatres accepting Dogecoin and Shiba Inu. And proof of work, files for unemployment, an opinion piece by Robert Lee on Medium. Is it too late to mine cryptocurrency? Bitcoin dips below 40,000 and Ethereum falls under 3,000 yet again. Hence, of course, the title of today's show. And then we're going to be talking about the market moves. Basically, exchanges are getting liquidated. So even though we have a drop in price, the proper thing is happening, in my humble opinion. But before we get into it today, let's run the ad. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Welcome back, everybody. Be sure to check out crypto.com. They are helping keep this show afloat, and I appreciate it quite a lot. Let's get into the first topic for today. It's going to be the 3090 Ti as the new high-end efficiency king, surprisingly. Now, what I have here is an article from WCCF Tech. The original came from Igor's lab, I believe, but I don't have details on the exact modifications. Hopefully, we'll get those over the rest of the week. This was posted on April 11th. NVIDIA GeForce RTX 3090 Ti card is without a doubt the most power-hungry graphics card ever launched, sipping over 500 watts of power and requiring insanely massive GPU cooling solutions to keep the heat in check. But at the same time, it can be tuned to become an efficiency monster in the high-end graphics card segment. The NVIDIA GeForce RTX 3090 Ti has a reference TGP of 450 watts, and most custom models are close to over 500 watts. The graphics card has supplemented such high amounts of power through a new PCIe Gen 5 16-pin connector, which is to accommodate TGP requirements of future graphics cards that would consume up to 600 watts of power. Of course, they're talking about Ada Lovelace here. While the graphics card is a power-hungry beast, it can be tuned to become an efficient monster too, as tested by Igor from Igor's lab, before everybody yells at me in the comments again. The graphics card will be limited to 300 watt power limit, a 37% drop in its TGP rating. This testing was done using the MSI GeForce RTX 3090 Ti Supreme X graphics card, which features a 480 watt TGP. It is one of the bulkiest graphics cards ever made. The testing was concluded not only with a reduced power limit, but also with an adjusted VR curve, which is carried over from the RTX A6000. The RTX A6000 is another card that features a full-fat GA102 GPU core, but it has reduced core and memory clocks, obviously for the data center. For testing, a total of 10 games were tested at 4K resolution. The power-limited GeForce RTX 3090 Ti graphics card was not only compared to the fully unlocked 3090 Ti, but other NVIDIA and AMD graphics cards too. The results are very interesting. And you can see here, there's some benchmarks here from Igor's lab. You have average frame rates and so on for random titles. And what you want to see here, of course, is the 3090 Ti 300 watts coming in above the 6900 XT, but still falling short of the 3090 Ti, the 3090, and the 3080 Ti. At 4K, the NVIDIA GeForce RTX 3090 Ti with a power limit of 300 offers almost the same gaming performance as the 3080 Ti while featuring a 50 watt lower limit. The card also ends up a tad bit faster than the AMD RX 6900 XT too. But these are just the power limits. The actual power consumption is a whole different story. In terms of power consumption, the NVIDIA RTX 3090 Ti consumes 6 watts lower power than the RX 6800 XT while being 16% faster on average. The Radeon RX 6900 XT consumes 50 watt higher power while the 3080 Ti consumes 100 watts of more power. The full 3090 Ti consumes around 150 watts more power while offering just 12% more performance. This makes the 3090 Ti the most valuable high-end graphics card in terms of average watts per frame provided to end users. Here is the power consumption charts that you can see if you would like to take a look. And all the way down here, even below the 6800 XT, 313 watts. And then, of course, it scales up from there. Now, enthusiasts don't buy graphics cards such as the 3090 Ti or the 6900 XT to throttle them down from their base specifications. They do so to utilize all the extra juice that they can get out of it. This demonstration isn't a practical use case. Well, it might be, but it does show that NVIDIA and its partners went all out with power and cooling design to extract everything out of the Ampere GA102 GPU core to remain on top of the game. It's good for efficiency demonstrations, but other than that, the testing is only good for demonstration purposes. So, from our perspective as cryptocurrency miners, what are we looking to do to capitalize on this? And the key is going to be obviously taking a look at Igor's testing and specifically carrying over the VR curve from the RTX A6000. If we can do that, and I don't actually have a 3090 Ti to test, but I'm going to try this on a 3090. Maybe we can get similar results on the 3090, but it's going to be kind of interesting. Once again, what are you trying to do here? Reduce the power consumption for mining. This could be a big deal for mining pretty much anything. Let me turn up that light for you guys. Pretty much anything on the market, right? So Flux, Ethereum, so on. More importantly, it could be a lot better in memory intensive algorithms such as ETH hash. This is some good news. We should be looking into it. This article was written on the 11th. I just caught wind of it now. I don't have a 3090 Ti. I don't know if any of the other cryptocurrency miners have actually tested this, but once again, it's the bringing over the VR curve from the RTX A6000 that seems to be or appears to be the key to unlocking the efficiency of the 3090 Ti and potentially the 3090 as well. We'll try to get to it this week at some point on my 3090s and see where it goes. Of course, they're overheating super bad, so who knows? Let's go ahead and talk about another price drop, less than 20% over MSRP now for both GeForce GPUs and Radeon GPUs. And this is once again coming from WCCF Tech. Super exciting here, but lo and behold, the NVIDIA GeForce and AMD Radeon graphics card prices are now as low as 12% over MSRP. And while the GPU market continues to recover, there is still some uncertainty within the graphics segment. In the latest report by 3D Center, we can see that GPU prices for both NVIDIA and AMD graphics cards continue to fall, which shouldn't be a surprise as the trend we have witnessed since the end of 2021. The NVIDIA GeForce RTX 30 series prices now average at around 19% over MSRP, while AMD's Radeon RX 6000 series averages with a selling price of 12% over MSRP. Remember though, the timing of these releases means that you had the 30 series kind of releasing at a lower price when they first came out, a lower MSRP. Than their competitor with AMD. So 12% over is still quite a bit high because really there were already inflated prices on the Radeon side when they launched at their MSRP for the most case, unless we're talking about, you know, the 6900 XT, which technically came in a little bit cheaper for the cards it was going to compete against NVIDIA. But it's a little skewed because the MSRPs are a little skewed here, right? In addition to that, GPU supply is abundant, and currently there's no retail outlet in the world that doesn't have graphics cards on their store shelves, which wasn't the case a few quarters back. But at the same time, there's a little uncertainty building up in the market, and we'll discuss that in a bit. Before that, let's take a look at the respective prices for each graphics card from Team Red and Team Green. As you can see here, for the 6000 series, you have these marks back in December. It was plus 83% over MSRP for AMD and plus 87% over MSRP for the 30 series. Moving all the way to April 17th, which is, I guess, yesterday. It has gone down for AMD to 12% over MSRP. And for NVIDIA down to 19% over MSRP. You can see the pricing chart here and links in the description below. Now, this is all based on Euro for the most part, even though the list price is in USD. So it can be a little confusing reading these charts, and it's not indicative of basically the US dollar market necessarily. It looks like AMD's entire RX 6000 series lineup, except the RX 6800 series card, are within their MSRP range. Why is that? I want you guys to pay attention to that, except for the RX 6800. Why is the RX 6800 essentially not hitting those? Well, its efficiency and sitting right in there has become that secret GPU for Ethereum mining. That's kind of what's been going on. if you keep your hand on the pulse of the mining community, you'll find that a lot of people are starting to pick up the 6800s. That's why I think that you're not seeing as big of a dip on the 6800. Is that what I would do? Not necessarily. It's just, like I said, finger on the pulse of what's going on. Another card that's similar to this that's not listed here because it only does 30 series and 6000 series that's not coming back down, thanks to me talking about it, is the 1660 Super, unfortunately. I was able to pick up a couple for under $300 on the EVGA website this week, so keep an eye over there. And really, under 300 is now where you want to be picking up those 1660 Supers, especially because you're starting to see launches or releases of the 3060 for around the $350 mark. Things are getting very interesting, and I'm trying to get the data for you guys, but it feels like as far as GPU pricing and availability goes right now, availability is really good, but the pricing is just all over the place. You're gonna have to bob and weave on your feet here. You're gonna have to be like, well, I was buying 1660 Supers, but the 3060s are really good price now. Or I was buying RX 6800s, but it's not coming down quite right. Maybe I need to bump over to, a 6700 XT or 6600. Or maybe I need to take another look at the 3090 Ti with its efficiency and see if I can get those VR curves moved over from the A6000. All of this is kind of how you're going to have to approach all this subject. And that's why we talk about all of this stuff every day, 9:45 a.m. to 10:45 a.m. Central, Monday through Friday here, so you guys can keep up to date as much as possible, right? And that's kind of what we have to do. So let's go on. The Radeon RX 6500 XT and the 6600 can now be found below the MSRP, while the flagship 6900 XT can be found at MSRP. Now, what's interesting is that we saw European retailers list AMD's upcoming 6050 XT custom models with over twice the MSRPs of existing models, which may give a sense of scalping going on by the retailer itself. But in fact, this price gouging prior to the official launch and introduction has been common practice even before the supply and shortages. Those preliminary prices should be discarded for now, and consumers should wait until the updated prices are listed on launch day. Remember, we also have basically quite a few interesting GPU releases coming down the pipeline here very shortly. We have the new Intel GPUs with which may be the most power efficient and the cheapest for the biggest bus available. When I say bus, I'm talking about memory bus. And that's important because memory bandwidth, total bandwidth, is a direct indicator of mining performance on Ethereum especially, but it does translate over even to things like Ravencoin, Flux, and so on. Maybe not to the extent, but it's important to note that we have potentially a $500 GPU coming from Intel with a 256-bit bus, which will be the cheapest 256-bit bus on the market. It's important to keep that in mind. The other thing is, of course, with the refresh that AMD is going to be launching with the 6050 XT or whatever. So 6950 XT, 6750 XT, and the 6650 XT, we're getting faster GDDR6 up to 21 gigabits per second. So the mining performance on those will in theory be obviously better than the current line of 6000 series GPUs. And that's going to make them more enticing. Should you wait for those for mining? That's going to be up to you. Obviously, we don't do the financial advice and all of that on this channel. And, we have that problem within, of course, cryptocurrency, which is expand or die. If you're saving up a whole bunch of money to purchase like something new because you think it's going to be the best, it launches, scalpers pick them all up and you can't get any, then you're no better off than you were yesterday. Remember, a lot of the goal is to wake up and do everything that you can do that day with whatever you have available to you. All right, so NVIDIA's GeForce RTX 30 series lineup is now averaging 19% surplus over MSRP, but the main issue is due to the high street prices of the RTX 3060 Ti, which is due to its demand in the gaming PC segment. The same is the case with the RTX 3070, as both of these variants still fall within what should be known as affordable range. The higher end 3080 Ti and 3090 Ti aren't that much inflated, and we can expect NVIDIA's lineup to come down in sub 20% or even single-digit figures by next month if this trend continues, which brings up the next topic. Of course, they're going to talk about proof of stake and the merge, like everybody wants to talk about all the time. Currently, the Ethereum proof of stake update has been delayed to the second half of 2022, which we reported here. This could trigger an intermediate recovery for the crypto mining segment, and this entire streak of prices dropping to normal can potentially be broken. While this will not be as big as a jump as the initial price hike, do note that any hike will once again take several months to come down, and we would have the next gen launches from NVIDIA and AMD be affected by this too. Hopefully, we will move towards recovery of graphics card prices rather than recovery of the mining slump. Once again, I want to point out they're saying 3060 Ti for the gaming segment and the 3070 for the gaming segment. But what do we know as miners? We know that the 3060 Ti is enticing for mining and the 3070 is enticing for mining, especially with the new unlocks from T-Rex miner, even on Ethereum. They're even more enticing when we start talking about Flux. So it's important to note that some of this price gouging or the price increase on just a few of these cards are really key indicators of what is happening also within the GPU mining market as well. Meaning, I think that it is blah, 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 blah. We can talk. It's fine. Just hold on a second. Meaning that it is definitely still affecting the stock and pricing of GPUs. So, what are we looking at here in the future? Right? We're looking at potentially prices to drop. Do I think that the delay of proof of stake a few months per Tim Biko is accurate? Well, yes. But do I think that it is influencing or will influence more people to purchase additional GPUs? And that's where I say probably not, because if we look at just the return on investment based on Ethereum only, and the fact that large GPU mining facilities are heavily invested within Ethereum itself and not really anything else, I don't necessarily see it affecting GPUs as much. Now, on the retail shelves, I think that we will see it affecting price, because I think home miners will be purchasing things like the 6800 XT, the 3070, the 3060 Ti's, and so on. Your goal is going to be finding, of course, that GPU that has the best ROI at any given time every day you wake up, if you have a little bit of cash floating around to purchase it, right? And that's kind of how this is going to play out. Let's go ahead and talk about AMC Theatres accepting Dogecoin, Shiba Inu, and other crypto via a mobile app. This is a really interesting move, of course, from AMC. And I think that it can be beneficial, of course, to the cryptocurrency market as a whole. I like going to the movies still. I know a lot of people don't, ever since we had the P word happen and kind of all the theaters shut down. It kind of waned and a lot of these companies started kind of taking a dip. What's funny is that AMC was one of those that went into the whole game stonks thing. It was one of those, Wall Street bets stocks where people were artificially inflating it to stop the shorting of it, and now they're just going full on in the meme coin. So it is pretty funny and a pretty good meme move from AMC, in my humble opinion. I think if I was at the top on their board and I was taking a look at public sentiment surrounding all of it, I'd probably dive right into it as well. Since being named a meme stock in early 2021, AMC Theatres has embraced cryptocurrency, most notably the Dogecoin and Shiba Inu coins, which Chief Executive Adam Aron has frequently mentioned in recent months. The American pro-crypto movie theater chain has updated its mobile app to accept Dogecoin, Shiba Inu, and other cryptocurrencies as payment. Aron assured followers via a tweet on January 6th that he will incorporate meme tokens, Doge and SHIB, by March. Aron's team delivered, albeit a little late. The interface with BitPay enables users to spend Doge and SHIB on tickets, concessions, and gift cards. Neum, a Singapore-headquartered cross-border payment company, announced the launch of an API-based solution in collaboration with BitPay that enables businesses to begin accepting crypto payments, starting with Bitcoin and Ethereum. AMC Theatres began accepting payment in digital assets such as Bitcoin on November 13th of last year. Despite this, the world's largest movie theater chain's mobile app has been left behind without the ability to purchase using cryptocurrencies such as the meme token Dogecoin until now. As of writing this, Dogecoin is trading at 14 cents, down 0.3% over the last 7 days. Shiba Inu was trading at this number, an increase of 5.3% over the last 7 days, according to CoinGecko data. The broader cryptocurrency market is up around 1% in the last day. I don't think that is actually indicative. Let's see when this was written. Burp, 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 burp. I think it was written this week, over the weekend, I believe. AMC and the Batman NFT. Additionally, AMC has introduced its own NFT collectibles via the Wax blockchain, both in conjunction with Spider-Man: No Way Home, which is an awesome movie. That's probably my favorite movie in a long time. There's two things that have come out recently that have renewed my faith in media, I think, and just like media consumption or pop culture. And No Way Home was one and Elden Ring was the other. We finally got a game that didn't baby hold your hand and make you purchase things in app. So those are kind of my two favorite things right now. But AMC introduced the Batman NFTs via the Palm platform, which also functions as a side chain scaling solution for Ethereum. Non-fungible tokens are non-transferable units of data kept on a blockchain, a type of digital ledger. They can be sold and exchanged and may include collectibles, artwork, and more. Apart from the new cryptocurrency option, Aaron recently revealed through Twitter that the AMC mobile app will now take additional payments, including Apple Pay, PayPal, and Google. Just open up all the payments, man. That's what you got to do, you know? We got our Bitcoin addresses down there. We got our Ethereum addresses down there. You know, we can take the memberships on YouTube. You can come check me out on Twitch at twitch.tv/blindrun. Use your Amazon Prime sub over there and help me out that way, which, by the way, we're streaming Elden Ring over there if you guys want to go check it out. And, you know, you got to open it all up. That's the way it rolls. You got to get every single affiliate account up. And then when taxes come, you just roll up into a ball and cry until all that money goes away. Because it's, you guys ever done YouTube and then tried to file taxes? Yeah, that's been rough. Let's go ahead and talk about proof of work files for unemployment. Is it too late to mine cryptocurrency? This is an opinion piece by Robert Lee, published in the Block 6 Medium post. And let's talk about his plan on how to navigate the ETH2 merge as a new cryptocurrency miner. This one is fun. So he says, I jumped headfirst into cryptocurrency mining to get a better understanding of the proof of work consensus mechanisms. While I have not looked back after starting my mining journey, I have a keen eye towards potentially lethal event coming down the pipeline: Ethereum's proof of stake merge. Ethereum's merge of their proof of work and proof of stake blockchains is one of the major events that will be leading to Ethereum's overall upgrade to ETH2. Remember, a lot of people are still doing this wrong. They're still doing it wrong. ETH2 is not a thing anymore. Remember, they rebranded. Ethereum 2, not a thing. There's Ethereum, that's it. Why is it Ethereum? Because they removed the scalability of the execution layer. Okay? That is all going to run on the original ETH blockchain and just be migrated over to run as a shard under the beacon chain, which is the consensus layer. And that is it. The execution layer is not going to scale the same. They have redone it. It's no longer ETH2. I need to make this extremely clear to everybody. Stop using the term Ethereum 2, because the other problem that it does is it gives the public a perception that Ethereum is doing what they originally said, and they are not. They are not going to be utilizing the sharding for scaling the execution layer. End of story. Just want to make that clear. It's a pet peeve of mine now. This merge will turn off the mining consensus mechanism. Will the merge kill crypto mining? Possibly, but I don't think that it's too late for newcomers as long as you capitalize on the current opportunities that the market is offering and have a plan. There's also an advantage to being a newbie. The urge to merge. No matter what the miners would like to see happen, the rest of the market has been calling for the ETH2 upgrade, which they're not getting. They're not getting that upgrade, just so you know. Golly. Come on. Ethereum adopters and users want to see lower gas fees. Now that can happen, of course, with proof of stake. Investors want to see a smaller environmental impact, and the developers just want to get everyone off their back at this point and into their pockets. Into their pockets. There is an urge to the merge, or to merge. With the Ethereum 2 merge, stop. It's killing me. Due to Ethereum's merge, all right? Due to Ethereum's change to proof of stake, will come the end to mining Ethereum. ETH is currently the most profitable and stable crypto to mine. Residential and commercial miners have invested thousands or hundreds of thousands of dollars into their mining farms. And it is easy to understand the financial concern that miners have regarding the Ethereum upgrade to proof of stake. Even with this uncertainty and fear, it might not be a bad time to get started as a cryptocurrency miner. Let me explain. He says the loss of Ethereum as a mineable coin will be huge, and the uncertainty surrounding the merge is scary. But that does not mean it is too late to dip your toes into the mining space, as it could be the start of a profitable venture once the dust settles after the merge. We could see the convergence of three major opportunities for newbies. Here's what he says those are, remembering this is an opinion piece. Number one, lower difficulty and hash rate on non-Ethereum algorithms. With most professional and veteran miners focusing on mining up to the last Ethereum block, the other coins will be open to lower difficulty for smaller miners. This may not last forever, but beginners will have nothing to lose dedicating their small mining farms to other algorithms. Number two, cheaper mining hardware. This is a big one, I think. I agree with this one, but we probably won't see the rock bottom prices of the last bear market. But GPUs and other mining hardware have steadily decreased in price due to the downturn in the crypto market and the threat of the merge. Newbies can take advantage of the overflowing supply that has started to hit the secondhand market, and obviously being able to purchase new as well, just so you guys are aware. Being a newbie, number three, being a newbie with no baggage. If you are new to mining, you do not have a large overhead of ETH-specific hardware, ETH-specific infrastructure, or next month's gigantic energy bill to pay. Yeah, I have all of those. You have the opportunity to build a mining farm with the merge in mind. I'm not going to quote that overused Warren Buffett's fearful and greedy line. We all have heard it a million times by now. If I had a Satoshi for every time I heard that quote, I would have been more Bitcoin. I would have more Bitcoin than Michael Saylor, he says. I just want to point out that uncertain times like this do sometimes yield opportunities. There's always a market advantage out there if you're willing to look for it and invest wisely. Here's his plan. He says, just like any other real estate, stock, or crypto investment, I have created a plan and rules behind my mining farm. Since these are volatile and uncertain times, I have tailored my plan with an exit strategy in mind as well. You know, I'm not going to do an exit strategy. I think that obviously my plan's a little bit different though because of the YouTube channel. So there's that, I think is what I would say. I think, backup plans are good. Obviously, like always, just my perspective, right? Backup plans multiple revenues, multiple streams of revenue. That's important. Skills, building new skills, whether that be coding or, data center management. You could get into IT and start researching, whatever, whatever specifications you need for all of that. There's always ways to bob and weave outside of just focusing on one thing. And that is kind of how it should go. But he says he's currently mining Flux, a decentralized cloud computing and hosting solution. With this in mind, I am slowly building a 6-card rig that is built on my old gaming computer hardware and used GPUs that I've found on Facebook Marketplace and eBay. He says, I am building smart. Just like investing in stocks and crypto wisely, I'm doing my best to build my rig 1 card and 1 deal at a time. That's the correct way to do it. You don't want to get yourself into a position where you basically have too much overhead, you have loans to pay off, all that sort of thing. We talk about this all the time. What should you do? If you got one GPU, start mining on it. Once it hits the point to where you've mined enough to purchase a new GPU, start looking for that new GPU. That day, whatever GPU makes the most sense on ROI, go ahead, purchase that GPU, pull it in, throw it on your rig, then rinse and repeat. And you do that until you have a mining farm. That's how this functions, right? You will run into things later on down the line. You need to upgrade power. You need to upgrade ventilation. They're going to cost more money. But hopefully by that point, your farm is large enough that it is helping you accommodate for those additional upgrades before you need to upgrade, of course, the hardware more. Mine efficiently. So here's what he's got pulled up, by the way. He's got a 2070 Super, good pickup, a 2080 Ti, pretty dang good pickup. Both of those are amazing. And then he has a 1066 gigabyte. So I don't know which card he started with, but it's looking pretty good so far. I don't know that I would put my 1060s are on Caspa personally, but I'm spec mining and he can't spec mine quite yet, right? So, if you have older cards that maybe aren't mining as well, like the 1060s, the 1070s, even on Flux. I think the 1070s are quite a bit better on Flux than the 1066 gigabytes, but maybe you want to throw them on something to spec mine. And then the only other thing that I'd be worried about is going to be some of the overclocks and so on. It's kind of odd, but that's fine. Mining as efficiently as possible is also important. I have found that the NVIDIA 20 series of GPUs are the most energy efficient cards to mine Flux. I would traditionally agree with that as well. So I can get about 40 solutions, 0.4 solutions per watt. This means that I'm getting the best bang for my buck out of my electricity cost. This is great for profitability in the long run, and it means that I'm investing in hardware that might be sought after by new Flux miners later. Stake long term. I think that the only thing is I think that the 20 series cards are going to be increasingly hard to get a hold of. So I kind of understand maybe purchasing them early right now. The only note that I would make about that is that the 3000 series is pretty dang good at mining Flux and pretty dang efficient, right? Just my opinion. I'm not one to shill a coin, so I won't. Also, I want to look at this. What miner is he utilizing? Does it say? Make sure that you guys put on mini Z for the miner. I don't know that I don't see it here, but that's okay. Stake long term. I am not one to shill a coin, so I won't. You can research it yourself to form your own opinion. What I'm pointing out is that there is a staking feature for running a node on the Flux network. This will allow me to stake the Flux that I mine long term to earn even more Flux over time. This is where I start to get into a little bit of a disagreement, okay? I'm not so sure that you should be invested fully into one coin if you are specifically trying to be successful at GPU mining. Meaning, I don't think that you should necessarily invest $3,000 at the base level or whatever it is. It's fluctuated a lot. It's, let's say, average cost $2,000 for 1,000 Flux or something, right? That would be just in general, right? 2 top-end GPUs, right? You could pick up potentially 2 3080 Ti's here next month once those MSRPs come down like they're projected to, and you could be mining that much more flux. I think that your snowball effect happens quicker if you are focused on GPU mining by continuing to increase the amount of GPUs you have. The other note about that is if Flux isn't successful, you still have GPUs to mine other stuff. If Flux isn't successful and you have 1,000 Flux locked up into a node, well, you have nothing. All right. That doesn't mean I don't like Flux. That doesn't mean that I don't like the noding. That doesn't mean any of that. What that means is we are talking purely practical. Take a step back, look at it objectively. What are your goals? What should you move to? I completely disagree with this strategy, especially at only having 3 GPUs at building a Flux node. You should be taking that $2,000 and getting more GPUs. You don't have enough GPUs yet, bro. You don't have enough GPUs yet. That's it. That's the end of story there. There's a lot more to running a node on Flux than just putting money into a wallet someplace, but I am all for it. My plan is for my money to work for me several times by buying hardware to mining to staking, maybe throw it into DeFi and then back to my bank account or invest it into my retirement accounts. Exit strategy. So here's his exit strategy. It is important to note that I am not going out and buying 12 RTX 3080s or hardware in bulk. I intentionally kept my cost basis low with used hardware. This will make it harder for me to scale quickly, but will also allow me to pivot or stop on a dime if the market or mining landscape changes. Once again, I think he has it right on the money here as far as it goes. It means not taking out credit card debt, not taking out a huge loan to invest heavy and grab a bunch of hardware. Just, keep calm, mine on with the 3 cards. When that earns enough, buy another card. When those 4 earn enough, buy another card. Maybe get up to buying 2 cards at a time, that sort of thing. He's got that nailed down in my personal opinion. Once again, not financial advice, but there's nothing wrong with starting slow. There are so many new skills and knowledge to pick up as a new miner that growing slowly may be the only good way to start. You don't want to grow too quickly only to find out later that you do not have enough power capacity to support all your hardware. You also don't want to grow so quickly that look, I have trouble replacing I have cards offline all the time. It's impossible for me as a single individual running basically 2 businesses at this point between YouTube and the mining farm to keep all of my cards up 24/7. And I only have like 130 cards, right? But I always have cards offline. Along with building slowly, I have also made sure to pick up old but powerful hardware in case I need to sell GPUs later. The 2080 Ti might be 4 years old, but it can still game at high frame rates and has a good reputation in the PC community. There will be a market for these cards for a few more years. As long as I can get 6 months of mining in, I will have some crypto to sell or swap, some Flux to stake on a node, and some hardware to sell, all for the price of my 13 cents a kilowatt hour of electricity and his time. Conclusion: even though the market is volatile and the merge is threatening to kill profitability for crypto miners, I still think there is an opportunity for newcomers. As long as we capitalize on the advantages that the market is offering us, grow smart and slow, and have an exit strategy. I think that other newbies and I will come out of the next year with some crypto, some skills, and some decent hardware. And then he says you can follow him. Overall, fantastic blog post by Robert Lee. Just want to shout that out. Be sure you guys go ahead and click that, follow him on Medium. Maybe make a comment, say, I saw you on Son of a Text channel, whatever. Let's support the community, the mining community, especially the new miners as they start getting in. Once again, I disagree with building Flux nodes, especially this early on in a mining journey, in a crypto journey in general. Other than that, I completely agree with his 3 main points of lower difficulty, possibly on non-ETH algorithms, cheaper mining hardware, and obviously not having that baggage of like huge farms to maintain to make sure you need to clear all of your bills. All that I'm pretty on board with. As far as his upgrade path strategy, we're golden there. I think that maybe his exit strategy isn't fully flushed out. part of the problem there is going to be like, even with the 2000 series, we're already getting close to the 4000 series. And I think that there are so many 3000 series in deployment at large mining firms right now that if they decide to start dumping 3000 series onto the used market, the 2000 series is not going to look very appetizing. So I don't necessarily think that it's correct to plan your exit strategy around buying 20 series GPUs. If you wanted to plan your exit strategy around a GPU purchase specifically, I would be looking at obviously purchasing newer GPUs like the RTX 3000 series or the RX 6000 series. That's my humble opinion, right? But that's also been my experience through the previous dip as well, meaning that I have seen this happen before. The Pascal GPUs hit rock bottom prices, right? Those 1063 gigs, those 1066 gigs, the RX 580s, once they went to the 5000 series on AMD side, all of those hit rock bottom. We're talking about at the low end, sub 100 pricing, right? 1063 gig, maybe like $75. RX 480, 470, 580, 570s, 4 gigabyte models, $75. 8 gigabyte models, maybe $125. So I've seen this happen before, and that's where I draw from my experience to just kind of let you guys know that exit strategy to be purchasing 2000 series GPUs as an exit strategy to resell them isn't something I would agree with. Let's talk about Bitcoin dropping below 40,000 and Ethereum under 3,000. Like we said in the title, Ethereum crashes. Obviously not a terrible crash, but under 3,000 is significant. I think that we've seen this before. It's going to significantly affect our profits for the week, but it's not all bad news, and we'll talk about that next too. Bitcoin and Ethereum have dropped below 40,000 and 3,000 after dipping below 4% and 5% respectively in the last 24 hours. Currently priced at 38,962 and 2,904. The two largest cryptocurrencies by market cap have been in a recent slump. In the last week, both cryptocurrencies have fallen by almost 8%. The latest series of price drops can likely be attributed to the mining industry, which has experienced several developments that may have put pressure on prices. Now, this is important too, because we are in the mining industry. What are these things that they're talking about? Why are miners getting pressured, right? Miners are getting pressured from regulation across the board internationally, right? And even in the US, even in Texas, which is supposedly going to be the Bitcoin mining capital, there are registrations now with ERCOT for being a miner. And part of the problem is that that's delaying your expansion opportunities. That's delaying standing up facilities and such. And then on the GPU side, of course, the Ethereum merge keeps getting closer and closer, and they're kind of dipping off, maybe selling off some stuff or whatever. The pressure on the miners means that they have to sell to extend out while they wait on basically maybe their approval from ERCOT if they're building in Texas or whatever regulations they're facing. New York is putting a ton of pressure on the farms up there. So to really extend out and you're having to wait, you're having to drop some of that Bitcoin that you've earned at lower than ideal prices for the mining, right? And that's kind of what's happening here. So the latest series of price drops can likely be attributed, to the mining. So Bitcoin mining. Last week, Bitcoin miners saw a drop in mining difficulty over 1% according to data from blockchain.com. Bitcoin mining difficulty, which tracks how difficult it is for a miner to mine a Bitcoin, has previously impacted the price of the flagship cryptocurrency. Back in July of 2021, and in the wake of China's crackdown on the crypto industry, Bitcoin mining difficulty dropped 28%. At the time, Bitcoin was priced at approximately 34,000 and was soon dipped below 30,000. According to Terran Times, Iran is also set to increase penalties for illegal crypto mining facilities using subsidized state electricity. Other market woes. Recent Bitcoin mining headlines are not the only factor in decreasing crypto prices. The broader crypto market has long been trending in the wrong direction. Last week, the crypto market fell by almost 10%, and the total crypto market cap fell to 1.84 trillion. Traditional stock markets have also struggled. At the start of last week, the S&P 500 was down almost 2%. The tech-focused NASDAQ lost over 2% of its value too. Previously, research has shown the crypto market, especially Bitcoin, to follow traditional equities. According to Arcane Research, Bitcoin's price correlated with the S&P last month more so than any time since October of 2020. What do we know? Once again, fundamentally, Bitcoin should not, in your own portfolio, be treated as a traditional equity. That being said, Ethereum, I would treat it as a traditional equity. But we don't see a decoupling between Bitcoin and the broader cryptocurrency market quite yet at this point, even though there have been hints of it over and over and over again. Bitcoin itself is supposed to be a hedge against inflation, a hedge against these things, but it's proving out to not be the case yet. I think a lot of that has to do with the public not understanding the actual functionality of Bitcoin and how it relates to things like the highest inflation we've seen, in like 40 years, was it, or something like that, at 8.5% last month. So it's kind of where we're sitting. But not all the news is bad, because we are seeing the public start to do the right thing. And that is taking their cryptocurrency and moving it out of public exchanges. Bitcoin's exchange balance hits a 3.5-year low. The latest move in crypto markets is context for April 18th. With each passing week, Bitcoin's blockchain metrics diverge from bearish macroeconomic factors, offering hope to long-term holders. The number of coins held on exchanges declined by over 20,000 Bitcoin to 2,449,785 Bitcoin last week, hitting the lowest since August of 2018. Now, this can be also indicative of the bear market too, if we're saying that 2018 is similar or the lowest points are similar. What are people doing? I think that if you take a look at this from my perspective, there are people just getting prepared to hodl their Bitcoin for a long time, right? For the long term. How does it affect it now with the institutional investors coming in and so on? Well, it may affect it completely opposite than the way we saw it correlated in August of 2018. It may mean, of course, that we are starting to see, we'll start to see the prices rise as there's less availability within the exchanges. The tally has decreased by 138,266 or 5% this year, indicating hodling, a crypto slang for buy and hold, remains a preferred strategy in the market. Investors typically take direct custody of coins when intending to hold them for a long term. That's what we just said, right? A continued decline in Bitcoin available on exchanges means fewer coins available for sale and the potential for an extended rally. Or in this case, an extended bear market that turns into a rally later on. Seeing that we're comparing these timelines, if we were to copy the exact timeline of August 2018, I don't know. It's just kind of what I'm seeing. Maybe I'm wrong. But I think obviously like your initial assumption would be this, right? What they just talked about. That would be the initial assumption. I'm just offering the counter to that. Quote, underneath the surface, there is a heavy phase of accumulation on chain, end quote, Blockware Solutions market intelligence newsletter published on Friday said. Quote, exchange outflows have reached a rate that only ever occurred 3 times before in Bitcoin's history, following March 2020, December 2020, a lot of which was likely GBTC, and September of 2021. As you can see, here's the Bitcoin balance exchanges since January of 18, kind of going up and up and up, and then kind of here, January 2022, and then kind of a little further on. It's kind of a small chart, hard to see it. Other metrics also paint a bullish picture. For instance, the percentage of Bitcoin inactive for the last year recently reached a record high of 63.7%. At the same time, whales accumulated 1,000 Bitcoin last week, registering the first weekly uptick since January per Blockware Solutions. That is sounding bullish. Even so, Bitcoin fell to a 1-month low of 38,577 during the Asian hours, taking the year-to-date decline to over 15%. The selling pressure likely stemmed from tax issues and macro traders liquidating holdings, tracking a continued melt-up in government bond yields and Fed tightening scare. Clearly, macro factors are in the driver's seat. Quote, "For now, we'll continue to listen to every soundbite from Fed officials as they look to combat inflation via scare tactics," end quote. ARCA CIO Jeff Dorman noted last week. Whew, yeah, that is, look, man, inflation FUD's going to be a big deal. Quote, "But 1 year from now, it's doubtful that the high correlation between rates, equities, and digital assets will be anything besides another footnoted relationship that didn't hold," end quote. Bitcoin and key support. Bitcoin's 3-day chart, where each candle represents price action for 3 days, shows the cryptocurrency is flirting with the 200-period simple moving average. Its critical level to watch out for, given bears have repeatedly failed to establish a foothold under the technical line since late January. Should they succeed this time, more chart-driven selling may be seen. A breakdown would expose support at 30,000. The current 3-day candle is set to close at 23.59 UTC on Monday. So there you go. We have a little bit of bad, a little bit of good, a little bit of, basically welcome to crypto. And remember the parable from the beginning of the episode so you can weather the storm. Let's go ahead and get into mining profitability for the day. Not looking great, not looking terrible, a little bit up today projected from yesterday. This weekend was the worst weekend in mining profitability I have personally seen in a long time. As you can see here, we did 0.066 Ethereum, and that is with an average hash rate of 5.3 gigahash, which came out to $194 US at the current price of Ethereum. That being said, today we're projected to be at 0.073, which would be the equivalent of $214 US. It's getting hard out here for a miner, boys, and covering expenses is getting very difficult in this particular farm, and I need to expand or die, and I am really, really stuck. And we'll be talking about that in a couple of vlogs, I think, this week, because I'm just in a, I'm in a pickle. I'm in a pickle. I'm in a pickle, and I need my new building to get finished up. That's what I need. But mining profitability, not bad. If we take a look at Varus, Real Regos, thank you for, of course, donating your hash rate. He also, by the way, is a member of the Caspa community, which is the coin that I'm spec mining. We talked about that last week. They have a hard fork approaching, and the upgrade is available for your nodes. So get out there and get it upgraded so you don't end up mining to the wrong chain. Mine is upgraded now. I should hopefully also be working on that too at some point, some sort of guide. But 2 Varus coin in the past 24 hours were up quite a bit on the amount of Varus coin. I don't know if that's because difficulty is decreasing or what, but we'll take a look a little later. Let's go ahead and get into it. RTX 3090 on what to mine. It was requested that I change this back to 10 cents a kilowatt hour. So we're going to go ahead and do that. Even though we've been on the 10 cents a kilowatt hour for a while, but let's go ahead and calculate this out. Correct the Zell hash. We have Ethereum in first place, not finally, but for the first time dipping below $4 a day in quite a while. We're just on the downturn, boys. We had some good days over $4 a day, but we're back under. Now, once again, nice hash for Zell hash and Flux is going to be more profitable than mining it directly at $2.66 a day after power. But if you were to mine it directly, it's $2.26 a day after power. This kind of goes back to the opinion piece earlier where he's mining Flux. I would try to maybe do something more reliable, but I don't really know what you do there. It's kind of weird. Maybe you just mine Flux on, well, if you do it on NiceHash, then you're not getting that Flux paid directly. It's kind of odd. I don't know what to do about this. I don't know if Flux has any ideas. Obviously, NiceHash is capitalizing on it, so they're not going to do anything about it. But it's making the Flux mining very unpredictable. Conflux at $2.37 a day. Ethereum Classic after power is $2.27 a day. And Ergo at $2.43 a day after power, actually making it pretty much the second most profitable to mine directly other than Ethereum. Why is that? Well, we'll probably take a look at the mining pool stats here in a second and see the oddity of Ergo's difficulty on full display, like we've been talking about for a while. Rio has dropped down to $2.26 a day, and Ravencoin is under $2 a day at $1.94 a day. Mining pool statistics. Bitcoin, 231 exahash a second. Remember when they said that Bitcoin mining difficulty had dropped by 1%? This is a huge bump in Bitcoin hash rate. So this is not looking like a diving difficulty. Once again, the problem with Bitcoin, you can see here, there's just a huge rise here over the past few days. Somebody deployed over the weekend. Bits be tripping. Carter, what are you doing to us? It's all Carter, boys. You saw him doing that last weekend. He's probably got them all online this weekend. But you can see here on Thursday, we were at 221 exahash a second, and we're at 231 exahash a second now. 10 exahash a second increase. Man, the Bitcoin mining thing, it's really hard for us small miners. Even me, and I'm not like super small. I'm not a home miner. Home miners, it feels super daunting. For me, it feels extremely daunting to get into Bitcoin mining. Definitely feels like those institutional investors are just destroying us, and we're never going to be able to catch up from an infrastructure perspective. And the other thing about that is we have basically over the weekend, that is the largest increase we've seen since the beginning of the year of hash rate on the network. And it doesn't care that the price of Bitcoin went down. So once again, we typically see the increase of price of Bitcoin following the hash rate, decrease of price of Bitcoin following the hash rate follows the decrease. Now that's out the window. Increase of hash rate all the time, no matter the price of Bitcoin. What does that mean though for the future? That means long-term holders are going to get paid off incredibly well, especially once we see the next halving from 6 Bitcoin to 3 Bitcoin. There's some change too. And I think that, 2025 is going to be absolutely bonkers, boys. Bonkers. Bonkers. It's going to be intense. Let's go ahead and take a look at Ethereum. Ethereum's at 1 petahash a second. No real increase, but of course, no real drop off. What is this? We've been at 1 petahash for forever. A lot of people kind of come in and they're like, I think it's going to go to 1.1 petahash now that the merge is delayed a few months. Do I think that? No. I think the uncertainty surrounding the merge is causing Ethereum to stay right at the exact same hash rate. And so going back to the opinion piece we talked about earlier, where he says mine alternative coins, if you're getting into mining, if you're building a GPU mining rig, what should you do? And I think that he has a fantastic point of, mining other coins. What is that going to allow you to do? It's going to allow you to kind of prep for it, right? Kind of prep for the merge. It's going to allow you to learn new things. It's definitely important to start learning how your cards respond to different algorithms. So definitely playing with all that stuff. I think that for the most part, I don't see a huge increase in Ethereum hash rate coming online. I think everybody's very gun shy surrounding Ethereum. I think where we'll start to see it maybe is in other places, like Ethereum Classic, for example. Ethereum Classic has had another uptick in hash rate up to almost 30 terahash a second. You can see here last week on Thursday around 28 terahash a second, almost 2 terahash a second increase. The difficulty responded in kind because it doesn't have a delayed difficulty. And people are continuing to mine it even as it dropped 7%. Let's take a look at every new miner's favorite coin, Fluxarino. 1.93 mega solutions a second right now. Lots of little spikes. It took a break over the weekend. Probably was a good time to mine over the weekend for Flux. Its unpredictability in basically the nice hash rentals created by the node and mining 50-50 structure makes it a little bit difficult, in my opinion, to really plan around for larger mining operations, but is definitely a bullish project when it comes to Web3. That's kind of how I feel about it. Let's take a look at Ravencoin. Ravencoin is one that's kind of just been sitting. Yep, it's up in hash rate to 3 terahash a second, but sitting around the same difficulty. Still struggling in price. It's at 5 cents right now. I don't know. Ravencoin's Ravencoin. The biggest problem I've had with Ravencoin is core degradation over time. I've talked about it plenty though, so you guys should be aware of that already. Let's take a look at the most power efficient algorithm out there right now. And the biggest problem with this one, of course, we'll talk about as well. So it's at 15.83 terahash a second. Hash rate is starting to go up because the difficulty had its little dip. So obviously, its 7-day history typically looks like this. It's about a 3 to 4 day delay or whatever. You have low hash rate, difficulty dips, hash rate spikes. It takes another 3 to 4 days or whatever to adjust on the difficulty chart. Then it spikes up and then everybody dumps off of it again. It's a pattern that I think needs to be solved for Ergo if we want to see it compete against the likes of Ethereum Classic post-merge. And why do I say Ethereum Classic? Why do I say Ergo and Ethereum Classic? From an infrastructure provider's perspective, from a miner's perspective like myself, I prefer Ergo and Ethereum Classic due to the lower power consumption, the lower heat output, and the lower stress on the GPUs, specifically the core. And that's why I like these algorithms, because I don't want to try to maintain drying up thermal paste constantly on the core. Now, there are some strategies to get around that, maybe graphite pads, that sort of thing, but it doesn't remove the fact that it is just easier to have a more memory intensive algorithm because you just have more reliability on memory modules than you do on the actual GPU cores. That's the end of story on that. That's why I lean more towards those algorithms, because it's just easier to run. That's what I want to run them on. Of course, with Ethereum Classic, the problem that we have is going to be, of course, their acceptance of all the Ethereum ASICs coming off the network post-merge. They are already saying they're going to support that. There's firmwares coming out from most large Ethereum ASIC manufacturers. That's going to be a problem. So then when I look at it, I'm like, oh, please, Ergo, just fix your difficulty problem. Please figure out your emissions, get it sorted. I don't want to try to provide infrastructure to a core intensive algorithm. I just don't. Like, it's going to be a lot of work. It's going to be a lot of work. And I am not lazy, but I'm busy. So let's get into mining pool profitability. For the last 90 days, Flex Pool in first, Crazy Pool in second, Mining Pool Hub in third. For the last 60 days, F2 Pool in first, Flex Pool in second, Mining Pool Hub in third. For the last 30 days, Flex Pool in first, F2 Pool in second, Crazy Pool in third. For the last 21 days, Crazy Pool in first, Flex Pool in second, F2 Pool in third. For the last 14 days, Crazy Pool in first, Flex Pool in second, F2 Pool in third. For the last 7 days, Crazy Pool in first, F2 Pool in second, Hive On in third. For the last 3 days, Crazy Pool in first, F2 Pool in second, Hive On in third. What is going on with Hive On? It's looking good, but usually it's way, way down. And for the last day, Crazy Pool in first, F2 Pool in second, and Ethermine in third. Bam. ASIC mining profitability. We got that good old Jazz Miner X4 sitting at the top at $96 a day. Kadena is taking a huge hit on the KD6 all the way down to $90.75 a day. KD5, another hit, of course. Kadena is taking a hit here at $61.03 a day. The Antminer L7 still sticking around that $40 mark directly on Doge. If you merge mine, you're probably looking at even more. L7's looking good. Of course, some of that AMC Theater news is probably helping out. And of course, Elon Musk talking about anything in the world, and all of a sudden Doge pumps, right? So look, Elon goes to take a shit, opens his Twitter on his phone, and Doge goes up. That's it. That's how it works. In a Silicon A10, 25.56 a day. We'll scroll down here to the Antminer S19 Pro, right around that $15 a day. No huge changes. Taking a look at BT Miners, sponsor of the channel. You can check it out down in the description below. They do have a KD box, HS box combo for $7,000 right now, which you could look at. I'm not a huge fan of the, well, no, the HS box, yeah. I like Handshake, but I don't know. I think those are a little heavy on the power consumption. Let's look at miners on sale. The What's Miner M30S, 104 to 110 terahash a second with the power supply, $9,160. S19 Pro still sitting right at where it was. The cold shell KD box has taken another cut in its price, down to $5,800 on BT Miners right now. And then what are the other big ones? S19J Pro, 100 terahash at $8,000. And then we see another cut in the Silicon A10 Pro at $9,199 at 720 megahash a second on Ethereum. So there you go. This is ranked by popularity, what other people are buying. So maybe you look at that. Look at that Antminer S9E SE, which I guess we should talk about. There are people that are starting to pick up used S9s for cheap. When you see that, why are they doing that? Mainly that's flare gas. Very cheap power. And S9s are still a majority, I believe 80% of the Bitcoin network, last I heard from some ASIC miners. So they're still relevant, surprisingly enough, if you have the power costs to support them. Home miners, obviously just avoid them. But home miners are probably going to be advised to, not financial advice, but they are probably going to be advised by most people to avoid ASICs in general. Let's get into questions and answers for the day. Remember, super chats never required, always appreciated. And the first to be answered because, well, it makes it a big bubble and it's easy to read. Next, tagging at Son of a Tech will turn the text at the beginning of the message orange. Please do it at the beginning of the message, not later on. It makes it easier at the beginning. And then I can read that easier. All right. So we had one super chat. I'm trying to get to it from Derek Castillo. $5 super chat. Thank you, good sir. Says, I am a delivery driver and today I saw a very familiar box. You have 2 Antminers in your truck. Antminers getting shipped out, bro. Boom. Let's get into some more questions as we go through this. 437 concurrent viewers today. Thank you guys. One day we're going to break 500 concurrent views. I believe it. I feel it. It's going to happen. We're going to do it together. You and me, we're going to do it. That's how it's going to happen. Remember, we're also on Spotify. If you prefer listening in your car later and you missed the show, you can always check it out on Spotify as well. Today, I'm wearing my shirt from BC Vault that they just shipped. We also have a special edition Crypto.com hardware wallet because despite the perception, the centralized exchange of Crypto.com does encourage its users to pull out any long-term holds and put it in a hardware wallet. So make sure you do that. We have another super chat for $10 CHF from As Blaster. I'm going to pronounce that correctly. He says, happy Easter, bro. Much love and thanks for the tips over the years. Thanks for the super chat, my man. Simon H says, ask Sonvatech, are you still mining Raptorium? No, I am mining Varus coin with my CPUs. I am mainly doing it as a learning experience for basically that algorithm, right? So it'll be the same algorithm that we'll be utilizing on SoapCoin. Library Explorer says, ask Sonvatech, what do you think about the Jazz Miner? 2 mega hash per watt. You know, the Jazz Miner is the Jazz Miner. A lot of people are extremely confused as to how that hardware is actually pushing that kind of hash rate. I am as well. I do not own one, so I have not taken one apart. The other concerning part is that it has an unchangeable time server. I don't know why I'm NTP connection to China. Now, you can block and redirect that if you have networking experience, but I do not have one to show you guys how to do that right now. I guess we could theoretically do it on a different device though, which could be possible. I could just get a random device, set it to an NTP server in China, and then redirect it. Let me know if you're interested in that. There's some weirdness around it, right? It's like one of those things. It just feels like a too good to be true thing. Also, you got the merge coming. Can you move it to Ethereum Classic? Yeah. But you're going to be moving it to Ethereum Classic with everybody else in the world, right? Queen of Random says, ask Sonvatech, you seem to be getting 600 mega hash more than reported on the pool. Do you normally average that much more than you reported, or does some rigs just go offline? It's the heat, and it is specifically the day and night cycle that is affecting it. Brandon Litt says, ask Sonvatech, your thoughts on Cero GPU mining? No current thoughts. I have not done enough research to speak to it knowledgeably at this time. Sorry. Colton says, ask Sonvatech, while I'm expanding to my goal of 40 GPUs, I act like I have no income from mining and fund everything through my job. But if I was married, man, I could see this not being balanceable. Yeah, you know, kids, all that's going to make it a lot more difficult. And, you know, hopefully, like some people are just going to have a harder time with it than others. Move at your own pace. Do what you can with what you have available to you, and do everything you can every day and leave nothing on the table at the end of the day, because you don't know if you're going to have tomorrow. Colton says, ask Sonvatech, buying a Bitcoin miner right now looks like it would hardly ROI before the next Bitcoin halving. Seems like just buying Bitcoin miners is far past the point of diminishing returns for me personally. And that's a decision that you can make, right? I think with Bitcoin mining, it's going to come down to power cost. It's going to come down to scalability, how fast you can scale it, all that sort of thing. It's going to be a lot easier with, you know, purely GPUs out of the house, I think. And you're going to be able to bob and weave a little bit more. That being said, Bitcoin mining is not going anywhere for a long time. Like 100 years. Dep SN says, ask Sonvatech, would you suggest anyone who have the money to start mining with a solar power setup? That's going to be up to you. Personally, I'm not moving into solar power because it's cost prohibitive in most cases, but it's not bad to start testing out, and the cost is getting better. Once it makes sense, it makes sense. Emmanuel says, ask Sonvatech, I'm trying to determine a good hash per dollar price on a card. Trying to keep it under $10 a hash. Is that too much? GPU prices are all over the place. You pay 10 cents a kilowatt hour. So yeah, once again, like, it's going to be a day-to-day thing, especially right now, because the GPU market's all over the place. You know, try to be patient. Make sure you're looking everywhere you can. You can check used markets like Facebook Marketplace. You can check a lot of these different things, but it can be very, very difficult to really give you any sort of advice on what you should be at. I think like definitely under $10 a hash is reasonable right now. But there might be a better deal, right? Or maybe that day you can't. You can't find $10 a hash. Maybe that happens here in the future. It's hard to predict that. Phoenix 3K says, Ask do you recommend getting a cold wallet even for a small miner? I think you should set up a cold wallet no matter what so that you understand how it functions. You don't have to put funds in there, but you should. Raymond says, Ask have you found a good solution for your 3090s regarding heat? Nope. Xander Coin Miner says, Ask what is the best GPU to mine Flux in your opinion? That obviously varies depending on the price of the GPUs in the market. But I would say the 2080 Ti off the top of my head. Scott Schultz says, at Summit Tech, do you think post-merge mining tubers will be more incentivized to keep spec coins quiet or announce them to their subscribers? Yeah, this is a problem. You bring up a very good point. This is going to turn into, from you as a consumer of mining YouTuber content, this is what you need to understand. And it's going to be very tricky for me to navigate, and I'll give you guys some strategies on how I try to navigate it. But you need to be very careful with crypto mining YouTubers when it comes to spec mineable coins and so on, because you don't know who's getting paid what and who's incentivized to do what. It's very tricky. Because even if you try to, as a YouTuber, a crypto mining YouTuber, like let's say myself, like in the case of Kaspa, obviously I don't want to be like, yo, here's Kaspa. I don't even know how to mine it yet, but here it is. But I wanted to tell you because I didn't want to start mining it before I told you, because then you guys might think I'm pumping and dumping it or whatever it may be, right? Or significantly increasing the hash rate on the network. Like Kaspa, like we talked about it, and the hash rate went up. The project's happy about it. It's not terrible, but all the miners that were in there are now getting a lot less Kaspa than they were. So they get a little like, why'd you have to talk about it yet? The other thing is if it does hit a listing, if I wait till the listing and then talk about it, then we're definitely in a gray area. So it's very difficult to navigate it from that perspective. Here's what I would say. Like if it's a very small coin that just got listed on an exchange and the cryptocurrency YouTuber makes the video on the day it went on the exchange, then you should have a red flag. Okay. That doesn't mean necessarily that they're doing something malicious or pumping and dumping it because they've been spec mining it for a while. It's just a red flag. Don't go out there throwing a rig on there and trying to sell more. Don't go out there trying to purchase a bunch of it. Just be very careful when you're navigating the space there. And it's going to be more of an issue later on. At the same time, another thing, like we've talked about on this channel before, if I talk about a coin, then the difficulty of the network goes up, which means that you end up having less profitability, like literally the day after I talk about it, or in some cases the same day I talk about it. It presents a very tricky problem as a cryptocurrency YouTuber because I want to share everything that I can with you all, but at the same time, like if the network's not ready, the network's not ready, right? And I may be playing around with something, and I could see this like being a problem on like Soakcoin, for example, too. Like if I just opened it up right now for all y'all to mine and blah, 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 and everybody jumped on it, and then there's problems with the network, I'm in a tricky position trying to develop the coin at that point too, because then you have, if there's problems and so on. So a lot of the smaller coins, it can be a little difficult to talk about them too early if it doesn't seem like it's going to be reliable, right? I would just be very, very careful though. I think like that golden rule of like, if they talk about the day it hits an exchange, just put a red flag in there, right? And then be careful if a cryptocurrency YouTuber talks about it. We see it all the time. We saw it with Raptorium and Rabid mining, right? We've seen it with this channel and a ton of different coins too. So it is what it is, right? Eric says, at Simon Tech, do you think mineral oil immersion would help you with your cooling? Yes, I do. Might be cost prohibitive. I haven't fully fleshed it out yet. Danilo Gomes, I think I said that right, says, at Simon Tech, finishing setting up my number 2 rig. Can you confirm Hive isn't free for over 1 rig a month? You would have to go to Hive OS, and they have their stuff set up right here. Let's go. Pricing. Boom. Done. All right. $0 a month. 4 workers. Once you're over 4 workers, then you start paying. All right. There you go. We have a huge super chat from Potentially Athletic. $99.99. Great channel. Keep it up. Thanks for the $100 bill. You rock, my man. Almost. It was almost a Benjamin. It was 1 penny short of a Benjamin. But I appreciate it a ton, especially during these slow times in the crypto market. Let's see. Thanks for joining, Win Peoples. And Mario, thanks for the 3-month membership. Josh Clement says, Ask Tech, where do you get your mining rig frames from? Amazon, AAA Wave, AliExpress. I'm bouncing around all over the place. But primarily Amazon. Texas Ace says, Ask Tech, how do you set up voltage curve for NVIDIA and Hive? You can do it in Windows by locking the core and changing the core offset, but Hive doesn't have this option. Yeah, I need to look into it because obviously, like we talked about today, there is that potential for some huge efficiency gains on the 3090 Ti. I don't know the answer to that right now, though. Detroit Iris says, Ask Tech, I think I saw Red Panda Mining take apart and block the NTP on the Jazz. Nice. Rags to Riches says, at Son of a Tech, I have a chance to pick up 6 3090s at MSRP. Is it worth to pick them up? You know, at this time, I think there's more efficient GPUs, and the headache of keeping them cool is probably not worth it. That's just me. Like, at scale, I don't want a bunch of 3090s. It seems like a nightmare to keep them cool and hashing at their full hash rate. Boy Matthew says, Ask Tech, ever think about making your own merch? We do have 2 t-shirts down below the channel, which I have designed myself. One is straight out of Power, which you can purchase, and it comes through Teespring. And then the other design I did was the Keep Calm Mine On, and yes, I drew the rig on there, and I use Inkscape for it, so didn't even pay for Photoshop, son. Golden Wolf says, good morning from Seattle, USA. Good morning, Golden Wolf. Trinity Black says, Ask Tech, as a miner who predominantly uses riserless motherboards, should I start just building normal mining rigs with risers, seeing as the 30 series can't run off the riserless? My question is why can't the 30 series run off the riserless? Is it a spacing issue specifically? And then you're getting the 3-slot cards or the thicker cards. You can do that on the lower end 30 series. The riserless does make it easier for positioning. All of the rigs are kind of odd with the new sizing of all the 30 series GPUs, right? Even if you get an open frame rig, it's kind of weird. A lot of guys are doing the octo miners and only putting they're getting the by 8 and only, or the by 12 and only putting I think 9 GPUs or something in there. So there's some spacing things that they do from that perspective. I know that that's how ProDirect handles it. Obviously you're wasting slots, which can be a problem. You know, your goal is to put as many GPUs on a single motherboard that is reliable as possible. So, you know, you can move to the risers. Just make sure with the 30 series, especially, that you have the 6-pin powered risers. You should be good. But it's going to be up to you and your designs. I mean, the great thing about mining is there's a lot to learn. There's a lot of ingenuity that's allowed, engineering that you can do, the backyard engineering kind of thing. Shade tree infrastructure provider is what you could call it. But yeah, it's going to be up to you and your particular setup, and then the money you are willing to spend on each rig, right? Get that muted. All right. Dark Alley says, at Sound of Attack, what thermal paste do you recommend for the GPU die? And how long does it last for Ethereum versus Ravencoin? So, great question. For Ethereum, it feels like even when it gets hardened up, it lasts all the time. I've tried a few different thermal pastes. I still think like the Arctic MX4 seems to be the longest lasting and the easiest to buy in bulk. So that's what I use. When we're talking about once you move over, and it's going to be heat dependent, so it will be dependent on your particular like cooling solutions. Like now that it's been very, very hot, it degrades faster, the thermal paste. But you are talking about like about, I guess, a 50% reduction or increase. I don't know, about half, right? So if you were going to run a year on the same thermal paste with, of course, like Ethereum, it'd be like 6 months on Ravencoin, somewhere around there. And it, once again, depends on like the ambient temperature, heat, and all that sort of thing. Your other option is to just start to slowly invest in like the graphite pads, the little squares. And at least with that option, you potentially don't ever have to replace it. And the cooling capacity is really good on those as well. It's just cost prohibitive to a certain extent. But if you're just doing like one GPU at a time, it becomes more manageable, and then you don't have to worry about it as much in the future. Detroit Iris says, at Tech, I like the headphones. What brand did the bunny did the bunny bring those? No, I've had these for a long time. These are the Audio Technica. These are some of the best headphones I've had in a while. I forgot which is the brand, or the ATH. Yeah, the M50X. Here, I'll grab it for. M50X. They're a little expensive, but they're they're studio professional grade headphones, and they're noise canceling, all that sort of thing. So there you go. It's basically, so this whole setup is pretty much what every YouTuber uses as far as like audio goes. You got the Go XLR, you have the Shure SMB or SM7B, and the Audio Technica M50X. So the only thing that I haven't upgraded to get on par with other YouTubers would be the camera. We're running an A6300, so the camera's a little outdated, and I could work on the lens. Is right though. We have the Sigma 16mm lens. So, yep, pretty much how that rolls. Thanks for the question. Andre says, ask Simon Tech, what kind of the core chip has NVIDIA founder edit GPUs? Because I can't understand what you're saying. Sorry. I lost complete track of that. And I do need to go. It's time. Thanks everybody for the questions and stuff. I am going to get going because it is 11:10. I did want to address one thing. Somebody said that the 3090 suck because you need to change the pad and it voids the warranty. If you're mining, it doesn't matter what GPU you have, you're going to have to change the pads. End of story, eventually. But the bad thing about the 3090 is you will probably never get it to hash at full hash rate 24/7. Thanks for watching. Be sure to hit the like, comment, subscribe, notification bell to get notified when we go live every Monday through Friday, 9:45 a.m. to 10:45 a.m. Central Standard Time. If you want to watch me get killed in Elden Ring, please go over to twitch.tv/blindrun, link in the chat, and you can go over there and follow. And I play Elden Ring over there in the evenings, at least for now. And then, of course, if you would like to listen on Spotify, let me get you the link for Spotify, if I can find it. It's fine. I got this. Bam. Episode 95 is up now. 96 will be up in a little bit. But there's a link to episode 95. Make sure you guys go follow on Spotify. Give me that follow on Spotify, boys. And you can also catch us on the decentralized blockchain-driven platform library, or the easiest one to check it out on is Odyssey. So if you want to do that, you can go follow that channel over here. And that's all the plugs I got for today. Other than check out the t-shirts below the channel. Please utilize all affiliate links to help the channel out. And I will see you guys next Tuesday.